Um, I would like to thank all of you for dropping everything else on Friday night and attending this, I believe, interesting event. I think they should ban conferences in December because there are so many events that you cannot possibly go to all of them. But thank you for coming. Also, I would like to thank our participants. I'll introduce them in a minute. My colleague Kalin Metodiev, who is our president of the Bulgarian CFA Association, is abroad, unfortunately missing, but he's, as usual, the main organizer of all these events. So he is the one who lobbies with the CFA Institute, who manages the budget, etc. So he's our most active president. Also, I want to thank Gloria, Gloria Nikolova, who is the new project coordinator of the Bulgarian CFA Association. So she also took part in organizing this nice event. A few words about the Bulgarian CFA Association. You know, Bulgaria is a relatively small country on the map of Europe. However, in certain professions, for example, modern and rhythmic gymnastics and the financial profession, Bulgaria ranks quite highly in this part of the world. You are probably aware that in a very big part of Europe, starting from Poland to the north, the Baltics, all of Central and Eastern Europe, including Romania, all the countries of the Western Balkans, including Greece and enormous Turkey, Bulgaria is the country number 2 after Poland in terms of the highest number of CFA charter holders. Fortunately or unfortunately, it depends, there is a similar number of Bulgarian CFA charter holders working globally, abroad. So we have a very strong pool of talent in the financial profession. Some of you are here. There are many who are not here tonight, but we can be very proud of this. So I believe Bulgaria is a nice investment destination and a good place to do financial business. That's why all of us are here, of course. Among the charter holders, among the speakers, 4 of us are CFA charter holders, except for Miroslav Cerar and Daniel Tomov, but you know, nobody's perfect. So, so now is the time for me to present the speakers. First, our keynote speaker tonight, who flew especially from Ljubljana to take part tonight, is next to me, Mr. Miroslav Cerar. I will introduce him in a minute when I give him the microphone. After him will be Tatiana Metodieva, who is the head of corporate finance and investments at Nexo. It's a very special new Bulgarian company. She will be speaking about the cryptocurrency market, but we'll say that in a minute. Next to her is Julia Katsarova. She's a portfolio management, my colleague at Expat Asset Management. She might be one of the youngest people, not only in Bulgaria, who finished the CFA exams at the age of 25. Maybe there are other people like that, but that's pretty impressive, I guess. Daniel Tomov is one of the most successful Bulgarian entrepreneurs, has spent a whole career in the private equity venture capital space. This is our sister industry, very successful in Bulgaria. They have major achievements in the last 10 years. He's been a founding partner at 11 Ventures, one of the most successful such companies. And finally, Svetoslav Velinov, who has had a long career mostly in the banks, and is the head of global markets at DSK Bank. Now, after so many mergers, is it the largest bank at the moment in Bulgaria? Depends. So, well, it's definitely one of the largest banks in Bulgaria. It's well known to everybody. So let's start. First, a few words about Mr. Miroslav Cerar. He's from Slovenia. He has had a long career, obviously, as a lawyer, as a professor of law. He was the Prime Minister of Slovenia from the year 2014 to 18. After that, after the following elections, he was a Deputy Prime Minister and Minister of Foreign Affairs. and now he's proudly back to his former profession as a law professor and also chair of theory and sociology of law at the University of Ljubljana. Of course, you can find on the internet so many things about him. Now, just a few things which I would like to share with you. I'm not sure he's the most famous member of his family, though. His father was a world-famous Olympic, European, and world champion of gymnastics, and so was his mother. So if you say in the Western Balkans Miroslav Cerar, I'm not sure which one they will think about. And now he's also a happy father of 3 children. I have a friendly wish. Let me wish that someday the next generation is even more successful and more famous than you. Mr. Cerar, you have prepared your presentation about many topics, but broadly some important contemporary topics of international relations, international policy, the Eurozone. You know, former prime ministers have a lot to tell us about all these things.
Thank you, Nikolai. Ladies and gentlemen, it's really nice to be here with you. And as Nikolai said, I will speak in this presentation and try to briefly present some advantages and disadvantages of a membership in the Eurozone. Moreover, I would also like to evaluate its benefits from a broader perspective, which transcends its basic monetary and economic framework. I'm convinced that the Eurozone is much more than just a monetary union. It is also an integrating system and mechanism with political and wider social significance. I believe that as such it is an important achievement which adds more cohesiveness into the European Union and supports not only its economic growth, development and competitiveness, but also its political and social strength. When we discuss the Eurozone, it is important not to forget that the idea of a common European currency was debated among European politicians as early as in 1970s. Despite its monetary nature and economic significance, the Eurozone has also been a political project. Thus, it would be wrong, or at least insufficient, to assess the pros and cons of the Eurozone merely from the monetary or economic perspectives. Even though these two perspectives are of highest significance, the political and broader social and societal features and consequences of the monetary integration must never be underestimated and even less ignored. The Eurozone is a multidimensional union which can thrive only if all its financial, economic, political and other stakeholders are well coordinated and if ordinary people support it because of its prevailing benefits. As you know, the Eurozone was established in 1999 and was basically an idea of upgrading of the exchange rate mechanism, ERM, which was introduced within the European Economic Community on March 13, 1979. The main objective of the ERM was to limit the volatility of the exchange rates within the EEC. But due to different reasons, the mechanism didn't last or prove efficient in the long term. Among these reasons were the principle of voluntary participation, the fact that departure from the ERM did not cause serious damage to the EEC economy, and the absence of a powerful central institution that would sufficiently unify its monetary policies. Thus, the ERM, despite being relatively successful in stabilizing the exchange rates, could not directly interfere with the sovereign central banks of the member states and their monetary policies, and consequently could not prevent some significant differences between the countries belonging to ERM in terms of the government bonds yields, the general level of interest rates, as well as the level of inflation. And what were the most important initially expected financial and economic benefits of the Eurozone? Firstly, and probably most importantly, there was an expectation that the introduction of the single currency would accelerate the growth within the EU economy due to elimination of the exchange rate risks and some other factors. This was supposed to happen mainly by expanding growth of the trade in goods and services, including tourism, and by facilitating capital flows, the latter being particularly beneficial for the less affluent countries, for example, Greece, Portugal, and Spain. The European market was supposed to expand and thus increase competition and economic opportunities. In addition, there was an expectation that the interest rates would remain at a relatively low level, especially in the member states which had a long tradition of high inflation and high public debt, for example, Italy, and therefore also had high interest rates. Secondly, in connection to the growth acceleration, the introduction of the common currency would also encourage all kinds of travel by giving people an opportunity of a fair comparison between prices of goods and services in different countries. Last but not least, the trade and services exchanges were also supposed to lead to a certain extent of price convergence. If we observe all these factors, we cannot ignore their political and social relevancy. A monetary union which provides common currency enables individuals to feel more comfortable when moving from one member state to another, thus the cultural and other people-to-people ties get developed with several multiplier effects in a broader meaning of the term. Moreover, the leaders of member states, as well as financial and economic stakeholders, become more interconnected and interdependent. And all this leads to many different synergies which cannot be measured only in economic terms. On the other hand, such union can be faced with serious difficulties and challenges, which can lead to sharp economic and political disagreements among the politicians and other stakeholders. Such difficulties may also cause turbulent reactions among people in different countries. But if the member states predominantly respect the rule of law and democratic processes and values, which are embodied in the EU treaties and other acts, different mechanisms can be employed to resolve disputes or conflicts in a constructive manner. If all this sounds too naive or optimistic, we should look after alternatives. Do we Europeans, who want to live in a peaceful, secure, and democratic environment with human rights and the rule of law, and enjoy a relatively high living standards, have any better alternative to the EU and its internal integrations such as Eurozone or Schengen area? Of course, each country and its citizens have the right to provide their own answers to such questions freely and independently. And having this in mind, let me briefly present some general observations regarding Slovenian experience with the Eurozone. When Slovenia became a member of the EU, it was on the 1st of May 2004, it also made the political commitment to introduce the single European currency and thus to join the economic and monetary union. Slovenia was the first of the ex-Yugoslav countries to have become a member of the EU and was the first of the EU's new member states, namely 12 countries which joined the EU in 2004 and 2007, to join the euro. Having met the Maastricht convergence criteria in a short period of time, Slovenia became the member of the euro area on the 1st of January 2007. The preparatory period and the whole process of convergence was organized as a multidisciplinary project with strong support of the state authorities, in collaboration with experts and general public. It was really an example of constructive cooperation between politicians, political parties also, experts, social partners, and civil society. Moreover, it was also an example of a very close and fruitful cooperation between the government and the Bank of Slovenia, which together drew up a changeover plan in January 2005. It laid down all essential procedures associated with the introduction of the euro and was updated several times as the date of the changeover approached. Since the general government debt was under 60% at that time, and thus in line with the Maastricht criteria, the key economic and fiscal policies were focused on bringing the inflation and budget deficit within the Maastricht limits. In addition, the Bank of Slovenia directed most of its attention and expertise to the issue of determination of the most appropriate fixed euro-dollar exchange rate. Dollar was our Slovenian currency. When euro was finally introduced, the respective amounts in Slovenian currency dollar were not allowed to be rounded up to a figure not exceeding the next unit, as it was common practice until then, and the movement of prices were carefully observed some months before and after the adoption of the euro. An in-depth study of the currency changeover published by the European Commission in May 2007 found that it was a swift and smooth affair and that the significant price rises feared by consumers had not materialized. While some unusual prices rise were recorded in restaurants, cafes, and the like, the overall impact on prices was marginal. Eurostat estimated the impact of the changeover on Slovenia's consumer price inflation at around 0.3 percentage points, while Slovenia's own Institute for Macroeconomic Analysis and Development put the figure at 0.24 percentage points. Moreover, the annual inflation rate actually fell in January 2007 to 2008 from 3% in December 2006 and dropped again to 2.3% in February 2007, suggesting that the impact of the changeover on some prices, although noticeable, was too small to drive consumer price inflation. Opinion polls confirmed the success. The vast majority of Slovenians polled at the end of January 2007 felt that the changeover had been smooth and efficient. About 95% of people thought so. And many people were happy, about 92%, were happy with the level of information they had received. Fewer, however, 56%, felt that the price conversions had been fair, and those who were considered the rounding off of the new prices to have been fair were actually in a minority of only 38%. The Commission published a new poll in May 2007, which confirmed the results registered at the beginning of the year. So in a nutshell, the main reasons for Slovenia's success in its endeavors for an early adoption of the euro were the following: providing macroeconomic stability throughout the period, gradualist approach to economic reforms in the process of transition, overall national agreement about the project, well-chosen and clear priorities of fiscal and economic policies, firm target date of the euro adoption, transparency and inclusiveness of the process, and successful information campaign. Only 12 months after its accession to the Eurozone, on the 21st of December 2007, Slovenia also successfully joined the Schengen area. And I'm mentioning this here to emphasize that the EU and its integrative projects and processes really matters to Slovenia and to Slovenians, who despite many difficulties and challenges, remained predominantly supportive of the EU and Eurozone. During the last years, the Slovenian Parliament and other state authorities have reinforced our national strategic goal to stay in the most integrated part of the EU. Every new integration or union within the EU carries with itself, besides its financial, economic, social, educational, or cultural consequences, a very important political message, namely that we support our common European project. And I'm strongly convinced that at the present time, there is no better alternative to the EU. If we allow the EU to disintegrate, we will not only be losers in the world arena, where other superpowers are gaining influence, but we will also step back in time. And we do not need to go far back, we don't need to go far back, just into the previous century to be able to see what a disintegrated Europe looks like and what it is capable to produce. Thus, it is important to understand that the Euro project is not of a merely financial or economic nature. It also has a very significant political impact on our common future. This is why, despite challenges that are part of any accession to the Euro area, I basically support the enlargement of that area. In this vein, I believe that Bulgaria's accession to the Eurozone could be an important step into the right direction if the following is taken into account. Firstly, the political authorities should fairly consider expert opinions and provide that all relevant stakeholders and civil society are included in the convergence process. Secondly, authorities, banks, companies and citizens must be well prepared for the accession and well informed about its advantages and disadvantages. In Slovenia, trust in the euro has been higher than trust in the former Slovenian currency tolar. The functioning of Slovenian economy has thus been easier so far, including the fact that the currency risks have been lower. Another big advantage of the euro is that payments and making business arrangements are easier, especially in the euro area. On the other hand, the Eurozone membership means that Slovenia surrendered its monetary policy to the European Central Bank, ECB, which leads monetary policy according to the state of economy in the entire Eurozone. This means that a part of our monetary and economic sovereignty has been transferred to the ECB. Immediately after the adoption of the euro from 2007 to 2008, Slovenian economy apparently thrived, but in fact it was overheated. Then it was hit by the world financial and economic crisis, which revealed Slovenia's weaknesses as well as shortcomings of the Eurozone regulations. Namely, after meeting all criteria for adoption of euro, Slovenian economic policy changed and caused a deepening of the crisis in the country by pro-cyclical measures and by expansionary fiscal policy that substantially contributed to overheating of the economy. A pro-cyclical economic policy lowered GDP in the long run, and an extreme example was the period of pro-cyclical economic policy during overheated economy in 2008 and before, and its catastrophic consequences in the period 2009 to 2014 and beyond. A distinguished Slovenian economist, Professor Dušan Mramor, analyzed these processes and came to the conclusion that at the beginning of that major financial and economic crisis, and I quote now Professor Mramor, the ECB conducted an inappropriate pro-cyclical monetary policy as it responded to the crisis at first by raising interest rates. After the change of the governor, monetary policy changed completely. With quantitative easing, the economic situation of the entire Eurozone was better addressed, which caused sharp criticism from the strongest member of the Eurozone, namely Germany. With a departure from tracking primarily its needs and taking into account the economic circumstances, for example, in France and Italy, the ECB's monetary policy also became more appropriate for Slovenia. Thus, the monetary policy of the ECB can be inappropriate for smaller countries like Slovenia, even when it is appropriate for the Eurozone as a whole, and even more so when it follows the needs of the most powerful members. Economic shocks affect Slovenia differently than the Eurozone as a whole. In most cases, the consequences are symmetrical, that is, in the same direction, but much larger in Slovenia as in the Eurozone. And in some cases, they are even asymmetrical, in the opposite direction. And it turned out that the structure of the economy in Slovenia, characterized by the small size of the economy, with industrial production mainly of components and less of finished products, significant weight of tourism, and an underdeveloped capital market, is much more exposed to the cyclical motion of the economy and various shocks. Slovenia, according to its economic characteristics, belongs to the so-called peripheral EU countries, which in case of large shocks serve as a buffer for core countries. For example, core countries mitigate overheating of their economies also by capital outflows into real estate investments in peripheral countries. For the latter, this means additional demand in already overheated economies. In recession, investors from the core countries cease to invest or even begin to sell real estate. Financial institutions in peripheral countries, which usually have headquarters in core countries, withdraw financial resources from peripheral countries, and by doing so, they neutralize part of the negative economic changes at home, but they also cause major fluctuations in the economic activity of peripheral countries, or even a collapse of the real estate and financial institutions and the deepening of the downturn, like for example in Spain in the crisis from 2009 and later. Such challenges of so-called peripheral and new EU countries cannot be appropriately addressed by Slovenia or any other such country alone, because the possibilities of conducting their own fiscal policies are limited by the ECB's monetary policy. This and the agreed fiscal policy limits in the EMU, especially those adopted during the financial crisis in 2009 to 2014 and later, were mostly adapted to the needs of the core countries. Since these criteria do not address relatively higher needs to respond more flexibly to the shocks and larger fluctuations in the economic cycle in peripheral and new EU countries, the search for more appropriate solutions remains a challenge for all the present and future members of the euro area. If you look at the Eurozone from Slovenian and broader perspective, we can generally say that advantages or benefits of the Eurozone are mainly related to increased trade, encouraged cross-border investments within the Eurozone, and the possibilities of mutual support in times of crisis. Most of the initially expected financial and economic benefits have been materialized to a relatively large degree. Travel has become easier by removing the need for exchanging money. Currency risks have been reduced in the European trade. Prices are more transparent. Movement of goods, services, and labor across borders has become easier. The countries and people in the Eurozone and in the EU, in the respective part of the EU, have become more connected and they can cooperate much more efficiently. However, despite expectations that euro would help countries in the Eurozone to be supportive to each other during crisis, and that larger and more stable economies would help to spread any currency risks more effectively. The global crisis, which started in 2020, showed lack of such mutual action and assistance at its initial stage. Because of pandemic, many EU nations closed their borders to each other. However, the ECB reacted to the situation by having bought up enough debt in afflicted countries, especially in Italy, to keep interest rates relatively low, and France and Germany supported a recovery fund worth over 500 billion euros, which all showed that the ECB and member states of the EU and Eurozone are able to mutually collaborate in crisis, even though it takes time and coordination efforts to find an appropriate agreement and approach for such collective action. In January 2023, it means next year, Croatia will join the Eurozone. And I consider this and every other enlargement of the Euro area as a part of a process which connects European countries and brings synergies to the EU development. Despite its difficulties and drawbacks, the Eurozone makes EU stronger in many aspects. This is the process which defies divergent tendencies which are a direct threat to our common future within the EU. The process of enlargement and strengthening of the euro area brings more economic, political and social stability to our union and consequently also to our countries. And this is especially important in today's world, which is becoming more and more turbulent, less stable, and more insecure. Now let me say a few words about stability and instability. In fact, there is no real stability in the world. When we use this term, we have in mind a relative stability, which means a relatively high degree of peace, security, safety, and predictability of our economic, political, legal, social, and other kinds of environment. Moreover, the stability by itself is not enough, at least not for the democratic part of Europe and the world. Stability must be accompanied by respect for human dignity, basic human rights and freedoms, justice, rule of law, and other democratic and ethical values. Otherwise, stability can be very effectively imposed by an authoritarian or totalitarian state where there is no space for human dignity, rights, and freedoms. On the other hand, the instability is harmful for any society and different societal subsystems, such as finance and economy. Thus, we must strive for stability. But for what kind of stability? On one hand, we need political, economic, legal, and broader social stability, which enables a normal free market dynamics regulated by law, including necessary protective mechanisms, and which also provides an advantageous and prosperous business environment. On the other hand, we need democratic, non-authoritarian kind of stability, and all this gives us another perspective from which we see how important it is to keep the EU and its internal integrations together under common and mutual protection of the rule of law and democratic values. The European Union can remain competitive and relevant on the world stage only if it preserves and further develops its economic power and democratic credibility. This is the core of its internal and international strength. It is important that the EU strengthens its defense, that is, military capabilities and international political influence or force. But due to a complex political structure of the EU, this is a very difficult process. Yet nothing of this is possible if the EU does not remain strong internally. All kinds of crises, the pandemic, climate, financial, supply, energy, and price crisis, and the Ukrainian war, of course, have created a very turbulent mix which can only be overcome by well-coordinated and solidary actions of the EU member states and EU institutions. And these actions include cohesiveness and well-functioning of the EU's internal structures and integrations, such as Schengen and Eurozone, and the EU as such. If we evaluate Eurozone through such a broader context and perspective, we can again draw a conclusion that Euro area is an important integrative European project which strengthens the EU as such and brings many direct or indirect benefits to its member states and their people. These benefits, basically of financial and economic nature, include democratic values, rule of law, security, and looking from a comparative perspective, also relatively decent standard of living for a vast majority of the EU citizens. Now, if we want to sustain the world economy, we must find a way how to tackle the most pressing challenges of this time. Even though the discussions on high inflation, coming recession, searching for alternative value chains, impact of the war in Ukraine, and many other such issues are important and valuable in this time of instability, we are missing the point if we do not prioritize much bigger challenges that threaten our world and civilization. Of course, in the short term, if we want to lower inflation and prevent serious economic crisis, we must, for example, find a way to increase productivity, further modernize the economy, reopen some old and create new economic chains and channels, stabilize the energy supplies and energy prices, avoid trade wars, and try to use diplomatic means instead of weapons to gradually resolve the Ukrainian crisis. But if we want to provide a sustainable development, which is not just an abstract necessity, but our fundamental moral responsibility towards our children and next generations, we must urgently and adequately address much more pressing issues and challenges. With the world population of almost 8 billion on one hand, and scarce natural resources and their uneven allocation and distribution on the other, we can expect even more instability in different parts of the world. It is true that each crisis is also an opportunity, but if the natural balance or balance within society are too heavily disturbed or even ruined by climate change, wars, or other calamities, the humanity will be left with no real possibility to preserve or build a decent and sustainable society. That is why we urgently need much more cooperation and collaboration on the global stage. Instead of isolationism or multipolarity, the latter being obviously on the rise, we need much more multilateralism. It is more than obvious that no country alone, not even the biggest ones, can successfully deal with the climate change, mass migrations, international terrorism, world pollution, pandemic, and other big challenges of the present time. Only together, through global multilateral cooperation, can the countries of the world successfully address the root causes and consequences of all such challenges. This doesn't mean that multilateralism is the only solution. An appropriate approach and action must take place in all relevant environments, at the local, national, regional, and international levels. But multilateralism is the final key to any substantial and tangible result at the global level. And let me conclude by saying that the world would be essentially poorer without the EU, without the European Union. The European Union is a protagonist of many sustainable economic, environmental, social, and other policies and actions, and is a role model for modern democratic integration and cooperation at the international or supranational level. For this reason, it is of great importance that we keep the EU together and strengthen its role in the world. This matters especially for the smaller member countries, which would be extremely exposed to unpredictable political and other pressures from outside, if they lost the protective common political and legal shield which is guaranteed by the EU. And this is just another reason why every effort to sustain and further develop the EU really matters. And it is also an argument in favor of the Eurozone, which is an important monetary part of the EU with multidimensional effects and potentials. Thank you for your attention.
Thank you, Mr. Cerar. At this stage, any questions specifically to him? Any critics of the Eurozone? Yes?
Yeah, critics.
Just a second.
I have only one question that I will divide in two parts. First is, what was the support for adoption of the euro in your country before the adoption, probably as percentage of population? And what's your advice for countries like Bulgaria that have a very, let's say, polarized societal opinion on the euro adoption?
Well, there were also doubts in Slovenia before accession to the Eurozone, of course. But this coordinated action, which was taken by the government, social partners, different economies, social, civic society, and so on, all this brought much more relevant information to the people. And even if there was some risk, we were ready to take it. I mean, it's always a risky thing to access a new integration or something like that. But we knew that, and I can speak on behalf of the vast majority of Slovenians, we knew that in the long term, this is a much better solution than to stay isolated in this way. I mean, the common currency was really wanted by majority of the people. And, you know, since the preparatory process and the convergence process really were well organized and went very smoothly, the people were very happy with all this afterwards even. So even now, today, we feel proud to be a member of the club because this club means something, you know. And it is much easier now for our companies to make businesses, not just within the Eurozone, even abroad. Because if you belong to the Euro area, it is a special, I would say, benefit. I mean, you can just use this something which brings some credibility, some trust by foreign partners. And then people are happy because we can travel much more easily to the countries with euro. We can compare prices in the same way, much more easily. And now we are very happy that Croatia will also enter the Eurozone because it will be quite a relief for many people who go to Croatia during the summer. You know, we like to go to the Adriatic Sea. And basically, it is a story of success for us. I know that you have doubts, you have, of course, other thoughts maybe, which I cannot address. But you must be courageous regarding this a little bit. You know, you cannot foresee everything. But from our experience, it really pays off. It is a good thing to be a member of the Eurozone. So I would say be proactive, listen to the experts, but still take this risk and come to our club. I think in the long term, especially the younger generations will be very happy with this.
Thank you. Any other questions? Yes?
Sir, I am from America. 20 years. 20 years in America. What does Bulgaria have to do with Ukraine? Tell me.
Well, you must clarify your question first. What does it has to do with Ukraine? I mean, what do you mean by
What
that?
do we have to do with Ukraine? America has something to do with Ukraine. What does Bulgaria have to do
Well,
with
it's,
Ukraine?
it's a European country, Ukraine, and we must all be very concerned if the Europe is at war. And then, secondly, of course, we must be, let's say, sympathetic with people who suffer in wars, not just in Europe, elsewhere in the world. So, I think that each and every country in Europe and everybody here and elsewhere should take care about such things. Of course, maybe we are not geographically so close, even though we are, you know. With such wars, you never know when it hits you, when they hit you. But I think that we must all do what we can to help Ukrainians and Russians, so to speak, to end this war. We must support all kinds of means, but especially the diplomatic means that this war comes to an end. So I believe that also Bulgarians are involved in a way, and the Russian is a partner, your Bulgarian partner, I suppose, economic partner. In all other fields you cooperate probably. So Russia, Ukraine, they matter to us. I don't know, how do you look this from American perspective?
From my American perspective, I believe that we cannot have any situation with Ukraine. You're Bulgarian. I'm Bulgarian. 20 years.
And what are the consequences of your position? I mean, you're very happy to be here as a Bulgarian. Yeah, that's good. That's democracy. Everybody can speak out. So,
Thank you. Any other questions?
Yeah.
Yes, please.
Hello, another young attendant here. My question is, you said that the European Union's challenge is fixing the inflation problem and making the economy better by increasing the productivity and finding a solution to the energy crisis. So what is your answer to this? How do you see it happening?
well, it's especially a question for economists and financial experts, and we have some here. I hope that they will be helpful here, because I cannot really give you very concrete answers to this. I'm not an economist or a financial expert, but I think that the Europe and the European Union is already doing a job, looking for answers, trying to cooperate, and I think that we will find some solutions. But as I said before, these are not the most pressing issues for us, because, you know, if the climate change hits us very strongly, we will have far more difficult issues to resolve in the future. And if let's say, the war in Ukraine does not end very soon, and if it expands, for example, it's another problem. So we must be very proactive within the European Union, but also in the world. We must remain at the world stage as, let's say, relevant actor and cooperate with some other superpowers to. We must be influential in this way, you know, because if you just look at so many things which are going on now in the world, the world really needs the European Union, I believe. We must be part of the solution also.
Okay, thank you. There were more questions. Yes, please.
Thank you. Good afternoon. My name is Christos Mouroudis. I'm Greek, but I live in Bulgaria for over 20 years. My question is related to the significant change of the European strategy and American strategy towards China. we expect a significant move of production from China and Taiwan to European Union, and I don't know if in your country or in other countries, and if you have knowledge on this, if we are prepared to create such structures and opportunities in order to accept production facilities back to Europe and give the proper legal framework and investment framework in order these big chains that we see now coming to be adopted in let's say, as of 23 onwards. Thank you.
Well, it's a very difficult question. It should be addressed to our government, I think. But you see, Slovenia tries to remain open to all the European countries and to the world. So we, of course, see our future in the most integrated part of the EU and the Europe as a whole. But we also cooperate with other countries, such as China, and from all other parts of the world. So we are not too much exclusive, and you know, a small country can afford it. I mean, you can still try to get along with the European Union, but also try to remain open towards other opportunities. But in the end, if you are just put before a very sharp alternative, either this or that, then of course we are part of the European Union, and we will seek our solutions, political or economic ones, within other members of the EU and within the Eurozone and other parts which are so essential for our common well-being. So if you want more precise answer, you should put a more precise question, I think. Yeah.
Okay. Thank you, Christos. Anyone else? Yes.
You mentioned in your speech that in Eurozone there are peripheral countries like Slovenia and core countries. Do you believe that in the future there will be steps to complete the Eurozone with also a fiscal union?
Well, I hope so, but it's difficult to predict that. You know that European Union has been faced with several difficulties in the last years, not just pandemic, but also internal disagreements. There are a few countries which would like to impose their own solutions, and there was not enough solidarity in some aspects. So it's very difficult now to expect this to happen very soon, because now we have to re-engage to build our union on a, let's say, more solidary basis first. And when we are able to deal with the present issues, then we can make a step further. Because it's very risky now to make further steps if you are not consolidated in so many ways right now. So faced with all that, let's say, instabilities or crisis, I think it's not the very best time now to think of this, but it must remain our future perspective.
Thank you. Great. So thank you, Mr. Cerar. We can move to our next speaker, Tatiana Metodieva. Well, very briefly, she's had a strong career in our profession. Started a long time ago with Postbank, which is a part of Eurobank Bulgaria. Then worked at Medical Techniques Engineering. Then at DSK Bank, EY, Ernst & Young, and is now the head of corporate finance and investments at Nexo. And she will speak about one of the most interesting topics tonight. Tanya?
Pleasure to meet you, and it's an honor for me to be here in front of such a knowledgeable professional audience. Not every day I had the opportunity to speak in front of fellow professionals, and here I'm very grateful to CFA Society to invite me here. So I'm going to speak briefly about the latest developments in the cryptocurrency market. Obviously, CFA Institute also implemented the topic into its latest curriculum, and as CFA also follows the latest developments in the financial world, it is a clear testament that crypto and blockchain technology has its place in the financial system. In terms of market dynamics, we are at the early stages of a bear market. In my opinion, market dynamics remain uninterrupted. And in a crypto market that is dominated by Bitcoin, we are going back to the 4-year market cycle, all too familiar to long-time crypto investors. Jerome Powell made it very clear that the central bank will continue raising interest rates until there are positive signs for inflationary pressure easing. So investors believe in Fed's determination and retreat from risky assets across the board. Over the past year, we have been noticing a strong correlation between cryptocurrency market and stock market, both being affected highly by the monetary policy perceived by the Federal Reserve. Crypto is also highly correlated and depends on the level of personal disposable income and has already been exhibiting signs of alternative asset class. So definitely we acknowledge that crypto is here to stay, but we see it as a very good diversification tool, either in terms of direct investment by institutional investors like tokens or derivatives products or structured financial products that have crypto assets as underlying. Certainly, crypto evangelists believe that crypto provides a good inflationary hedge, but we believe that it is a beta over the technological indices, for example. What we see clearly as well, despite the market turbulence here, is that actually the decline in cryptocurrency prices are related too much and are a result of the general bearishness on the global financial markets, and it's not resulting, for example, from some specifics of the digital asset space. In the meantime, however, talented engineers continue developing cutting-edge applications that will be used in the next few months and that will go to market in the next few months. Over the last bull run, for example, top talents joined the blockchain space from finance, from technological development, from engineering. According to Darwinian theory, for example, the companies that are more resilient and adapt to the harshest market conditions will be the ones to lead the next bull run. Този работи ли? Чудесно. So, clearly for us, for the whole industry, this is painful but necessary period that will separate the wheat from the chaff. And it's a good time for consolidation here, and these turbulent times will be helpful for the whole industry to weed out these unsustainable business models and lay the path for those companies that are ready to prove their business models, to develop products that are resilient to even the harshest conditions and win the next stage of Web3. Essentially, if you remember the dot-com bubble in 2001 and the dot-com crash, just 1% of the companies at that point of time managed to survive. And we see that these companies that managed to survive became and still are the leading technological companies of our times. So for us and for all the companies that are poised to grow, especially in these market conditions, it is a great time to build hard, to focus on fundamentals, and be smarter, be more efficient, be very lean in terms of OPEX in order to stay for the long run.
Great. Ladies and gentlemen, at our previous, some of you might have been there and remember, 4 or 5 years ago, we had a big CFA conference international at the Hilton Hotel. Was it?
It was at Hilton, yeah.
Yes.
It was 2017. I clearly remember it.
So 5 years ago. And the first panel was full of about 6 prime ministers, deputy prime ministers, ministers from other countries, then a number of professionals from the whole region. But the way to keep the audience, about 400 people, until 7 o'clock in the evening, was to put the crypto panel last. So it was a very interesting moment then. Since then, of course, the world has developed a lot. And may I have the first question, Tanya? Now tell me, what happened in the last few years? Your company suddenly started from zero and you developed a big global operation that can be based in any country in the world. It's very impressive. What happened?
Well, clearly, we wanted to create the Skype effect that happens in Estonia here in Bulgaria. So it's a huge success story, and I'll be very happy to share with you, because the company currently employs over 700 people, and just for a short period of about 4 years, it managed to scale a lot and became the global leader in its niche. So Nexo is known as the largest retail-oriented lender in the digital asset space with over 6 million customers globally. The company has scaled significantly, providing services to customers located in over 200 jurisdictions. And we are well positioned to grow and scale through M&A and also strategic investments. We have dedicated 150 million for Web3 projects, early stage investments in the ecosystem. And we approach this very carefully from the perspective of a strategic investor. You know that a company needs to grow, to build very diligently before being able to grow synthetically. And we reached the point of need to grow synthetically about 3 years ago, when we started looking for potential targets in the digital asset space, but also in the TradFi space that could complement our product offering, our licenses stack, in order to help us grow as by that time, and we still continue growing organically through prudent reinvestment of earnings.
Okay, thank you. Any questions here? Yes.
I gotta pick your brain on something that you said very early in your words. That is, crypto is in the early stages of a bear market, but I'm sure you know that the flagship asset Bitcoin is in a 75% drawdown. So if this is early stages, what happens to the late stages? And the second question is, what percentage chance would you give to this being the extinction level event? What's happening now in the crypto space to this being the extinction level event for the industry?
I don't believe certainly that this is the extinction level, or that we are close to the extinction level, because there are much more factors in this industry that will support us and help us grow even further. So as I said, I strongly believe that crypto, and not only me, but obviously all the fellow professionals in this industry, that crypto has affirmed itself as an alternative asset class, as I said, and it's not only crypto, but it's the blockchain technology, which is poised to be incorporated in many activities, in many initiatives of our day-to-day life and the Web3 space in the future. But you mentioned about the crisis. So it's not the first time we've been evidencing over the past few years such kind of event. 2020, it was more than 50% in just one day at the beginning of COVID. So this was the huge first market test, I believe. And then 2021, May, again, a lot of turbulence on the markets. What I clearly believe and what I said, that companies that possess strong and resilient business models, that are very careful in terms of risk management practices and are uncompromising when it comes to licenses and registrations and regulations in particular, will be able to survive, will be able to thrive and win the next bull cycle. This is what we are currently doing. We position ourselves for the next phase. For us, it's like a business as usual. We are currently in several processes to acquire companies. We don't only have the balance sheet to do it, we have the capabilities to scale these businesses, to integrate them in our company and be able to win the next phase.
And about the drawdown and the early stage drawdown?
Well, you should look at the technical analysis. Yes, there are certain levels, but I believe that if we haven't reached the bottom is near, and it's not certainly on its extinction level. And also, institutional adoption already shows some very strong signs of support here. You are seeing even the skeptic, Jamie Dimon, from JP Morgan, who is one of the most critical people that don't want to accept the existence of crypto. But what actually JP Morgan did a few weeks ago, in the beginning of November, they launched the first transaction on DeFi. So we will see a lot going forward from institutions.
Thank you. Any other questions? Oh, yes, please.
Hi, Tanya. Thank you very much for presenting tonight. I've got 2.5 questions. So my first question is following the trajectory of your the beginning of your presentation, and you've mentioned that you believe that crypto is here to stay. Can you please elaborate a little bit on that? And my second question is, what do you think is the main drive behind crypto price appreciation? Thank you very much.
Sure. The answers of these questions, I believe, are interrelated. So you know that institutional investments are a barometer of a healthy market. And what we saw over the past 2 years is a very, very strong adoption and increase in institutional presence on the crypto space. This is what really helped the industry grow in 2020, late 2020, 2021. A lot of money was poured in this space, and a lot of smart money is still waiting to be deployed. A few months ago, there are notable investors like Sequoia Capital, Andreessen and Horowitz, also Pantera, that raised funds over 1 billion dedicated to investments in the crypto space. And despite the crypto winter that we have been living in, at the moment, there are new funds that are raising successfully funds for the next phase of the expansion. So, as I mentioned, one of the factors for the growth of the market over the past year was clearly the entrance of institutional investors, and we will see a lot of institutional players going forward, like, for example, BlackRock, Fidelity, even Tesla, Microsoft, PayPal, they started accepting digital assets for payments. So this is just one of the use cases that we may evidence that will grow the further adoption. In terms of regulations, this is something very important. Currently, regulations are non-existent in the crypto space, but we know that there will be and there should be regulations in place in order to bring some order in this crypto wild, wild west. And as soon as there are regulations in place for which we prepare very, very diligently, obtaining licenses and registration, this will give a sense of comfort, more comfort, both for institutional investors to enter this market, to increase their adoption of crypto-related services, and for customers to feel more secured and more confident as their interest will be protected.
Thank you. There were more questions here. Yes, please.
Hi, my name is Jay. I think you already prepared the answers to these questions. It will be uncomfortable, but I think you already prepared that. You know that currently the whole market of the cryptocurrency is not good. FTX fell down, and BlockFi, is bankrupt, and the DCG is at risk now. So FUD is spreading. And people around the world, they are thinking that Nexo will be the next one who will fall down. Okay. And I know that Nexo, you released the proof of resolve already. But according to the transaction history, that November 13th, you moved more than 9,000 Ether to Binance to sell, I guess. Is there any liquidity issue in Nexo?
No, nobody here is under NDA, but we can share information freely in order to be as transparent as possible as we have always been. I believe that Nexo is actually one of the most transparent companies in the market, and I'm very grateful that you asked this question, because I don't know really to what extent people in this audience follow the latest events, know the names of these companies, but for us this means a lot because we live this on a daily basis. So yes, the collapse of FTX will have second-order derivative effects on the whole industry. We didn't have any exposure to FTX, FTT, Alameda. We didn't have any exposure to Genesis, Gemini, DCG, because it's a prudent risk management practice that we have never abandoned. This is very key for Nexo, and we have never compromised about it. We didn't have any exposure to Three Arrows Capital or Terra Luna. Again, for example, I can tell you, both Three Arrows Capital and FTX reached out to us before in order to lend them on a non-collateralized basis. But that's against our rules and that's against our business model. We were uncompromising and we said no. And they said, how come on? Nexo doesn't want to lend us on a non-collateralized or under-collateralized basis. Everyone else in this industry is doing this. And we said no. This is our business model. This is what we do. It doesn't matter whether you're institutional customer, whether you're a retail customer. We didn't make any compromise, and we proved to be successful. We've been monitoring FTX and BlockFi for quite some time. You mentioned this name specifically, but maybe you have seen that we actually bid for BlockFi during the summer. I was the one to myself sent the proposal to the board of directors of BlockFi and to reach out every night to their investors. But FTX was second largest exchange in the world, and Nexo is a European company that is doing very, very well, that is navigating the storm very well, but still they are European, a little bit private. Let's stick to the FTX. We knew why FTX wanted to buy BlockFi. We warned the investors. We were monitoring some transactions on the blockchain. The beauty of blockchain, you know, that it's very, very transparent. You can connect the dots if you know where to look. So there were some very bad signs for us at that point of time during the summer. And we started warning, and we started withdrawing funds from FTX. we had an exposure, but we managed to withdraw everything a few days before actually FTX halted withdrawals. So no liquidity issues, no concentration with any single counterparty. This is what we do. We play by the TradFi rules.
Thank you. Yes, the next question.
Good evening. I'm Clement Ovmasyan, Senior Risk Manager in a US company and ex-professional trader. So my question is related on the Bitcoin trading part because before the crisis has started, actually, many people and professionals, retailers are talking about that Bitcoin specifically is a hedge asset. There is no any impacts on the central banks, inflation, etc., etc. So, but the reality check shows that actually the trade is kind of different that we are talking about before that. Bitcoin has down as much as 75% or around that, and not any asset has been down in that percentile. And thinking about the liquidity of such companies like Nexo and the others, we know that the liquidity is closely related to the taxes, fees, spreads, profit making from the retails. And we know that retails are the hugest part of that business in the other way because it's acceptable all around the world from the people. Do you believe that after the new bull market come, that belief will remain and the people are going to start to invest again, not just making short-term profits, but investing as a hedge of the inflation, as in the long-term investment, and in the direction that they are going to put their money in a long term? Because I think the belief is a bit away from the current situation.
Yeah, I certainly believe in the long-term perspective. Are you speaking about Bitcoin in general or about this asset in particular?
Let's say you're including also Ethereum because the rest of the crypto assets are kind of, how to say, they're secondary assets, so not many people are interested in them. While Bitcoin and Ethereum are all news, non-news, people are familiar with them and they're going to put them all their money in investment out there. It comes into Ethereum or Bitcoin.
Yeah, well, I do believe that currently trust has eroded in this market because of the collapse of major players. And maybe the second-order derivatives, as I mentioned, are still not visible. And the worst is yet to come. This is what is my personal belief. But you have been following Bitcoin's development for quite some time. And you know that Bitcoin's halving is in 2024. So my personal view here, I mean, disclaimer that I don't give any advice, is that the market will recover in around the end of 2023, poising to grow further and enter the next phase of the bull cycle of 2024. With any asset that has limited supply, I do believe that people will be still interested to invest and invest even further. So it's a good time to position themselves to build positions that will grow in the future.
Just one very quick question. You've been using the word asset quite a lot tonight, but to my understanding, the asset itself should generate some value in a sense of different than speculation and appreciation from just more money being dedicated to a given currency. Why do you think Bitcoin is an asset? Thank you.
Yeah, it's a good question, really. But yeah, what I wanted to mention, and I started with this, is that already it exhibits the store of value characteristics. So this is something that Bitcoin was created to be, an alternative of the traditional financial system. Yes, there are Bitcoin evangelists, as I mentioned, that still believe it's an inflationary hedge, but it's not my view here. It's already correlated with traditional assets.
The problem is that it doesn't produce value. If I have 10 Bitcoins today, the only way for me to make money is that someone believes that they work more in a certain period of time.
So how about the other currencies?
Pretty much the same, yeah.
It really depends on the use cases. I mean, it's not about.
Yes, I've got $10,000. I buy one Bitcoin today. How is it going to produce value for me? What's that ROI, excluding the speculation?
It's a personal value. I mean, it's a personal belief here.
Okay, thank you.
Okay. Yes. One of you.
I want to build on the opinion of our colleague there and say that I remember that there are three motives to have money. Like the first one is to speculate. The other one is a mean of transaction. And the third one is the store of value. And in that sense, what is the purpose of Bitcoin? How do you see Bitcoin and other crypto, the so-called assets, in this perspective? What they want to be? Do they want to be, or what do you want them to be? A store of value, a mean of transactions, or I don't know? Do you want people to speculate with them?
I believe that the answer is there. It's all of the above, and everyone has their own perception of what they want Bitcoin to be or what Bitcoin means to them. There are multiple use cases for the adoption of Bitcoin as a store of value, as means of payments, as an underlying for other assets like structured financial products. So it can mean a lot for everyone.
Okay, maybe one last question, please.
Thanks for taking the time. It's Alex from Barclays. I work with plenty of institutional clients, and I believe you mentioned you've seen plenty of interest from institutional clients. I'm not surprised. What I am trying to figure out what needs to happen in order for institutional clients to feel confident investing in crypto in the long term, because that's not the case with my clients at this point. There are plenty of concerns around recent events, but if you take a step back, there are plenty of other concerns because crypto is supposed to be an asset that's kind of decoupled from other asset classes like stocks, like bonds, but has not been the case. First and second, how do you think about the correlation between rising rates and crypto? Because those are the questions I'm getting from institutional investors, and this is kind of one of the arguments that they're making why they are not confident, allocating a bigger chunk of their assets into crypto at this point.
Yeah. So as I mentioned, for me, the way to increase institutional adoption and more institutional players coming to the market will be first through more regulations that will bring more. The problem is that regulatory bodies, I mean, it's a very, very fragmented regulatory regime. Each and every single country has their own drafts for regulations. In the US, for example, it's still unknown whether the SEC or the CFTC will oversee this nascent industry, and there is some political debate between these two institutions to which we as participants, as players in these financial markets, suffer because we are not able to offer the products we want to offer in a regulated manner. We don't know what the regulations are. This is a hurdle for us as well, like participants. The markets in crypto asset regulation that is currently drafted in Europe and is considered to be adopted next year at the end of 2023, I do believe will have a very positive effect for the European Union. And it will be like, I mean, every one of you here knows MiFID and GDPR. The effect that MOICA will have on crypto markets will be the same as MiFID and GDPR for the respective other markets. So regulatory clarity is one point of time. Obviously, institutional investors, if they are seeking only for return, I don't believe that this is their game, because high risk comes with high volatility and high returns. So they should be motivated by other rationales rather than just generating the return from these investments. That's why our goal as investors in this space, because we are also institutional investors, and I've been speaking with private equity funds, growth funds, both from TradFi and also from the crypto space, is to be here for the long run, invest smartly, invest strategically, invest not only in tokens. We are just speaking about tokens and hypothesizing regarding some cryptocurrencies. I do believe that institutional investors should invest in projects. They should invest in builders, in those companies that will develop the infrastructure for Web3, because this is the next big thing and we are just beginning.
Okay, thank you so much. Frankly, I'm not doing so well with time because we never expected so many interesting questions at a boring financial conference. So we now have our third speaker. Julia Katsarova is, due to her date of birth, she's only at the beginning of her bull market career. She went to universities, first of all in Thessaloniki, the University of Sheffield, then her master's at Durham University in the UK, joined Expat Asset Management almost 3.5 years ago as a financial analyst, and then was promoted to be a portfolio manager. She's going to speak about 2 other asset classes. You know, tonight we are very inventive. We don't speak about plain vanilla stocks and bonds and so on. She will speak about investments in art and also commodities or natural resources. Julia.
Okay, thank you. And thank you everybody for being here. So, yeah, I have 2 topics, so I will just commence with my presentation. 2022 was and still is a very volatile year, so briefly mentioning some numbers in order to give you a context before commencing speaking about art and natural resources. So we have inflation at a 4-decade high, Ukraine and Russia war, unfortunately, and a lot of volatility on the oil market as well. The euro quoting for a while below parity versus the US dollar, and we've already mentioned the crash on the cryptocurrency market with 75% fall down of the Bitcoin. So in the same 11 months that the S&P went down almost 15% and NASDAQ lost almost 30%, and the safest asset in the world, the US Treasury, lost 13%, the global art market is about to experience a record-breaking year in 2022. So I will give you some stats about the global art market. Global auction sales from the 3 largest auction houses, Christie, Phillips, and Sotheby's, they recorded auction sales jumping 25% in the first half of 2022 compared to the same period last year at $7.4 billion US. And 2022 half-year sales are already 30% above the pre-pandemic level in 2019 and 6% above the art market peak in 2018. So it's a record-breaking year for the art market. And now more recent news about art. Just 2 weeks ago, $1.6 billion was auctioned from the collection of the Microsoft co-founder Paul Allen to become the largest single owner sale in the auction history. So it's very hard to believe how during these turbulent economic conditions can support such a strong art market, while simultaneously we are seeing very big sell-offs both in the equities market, in the bond market, cryptocurrencies, and all other asset classes. But one can ask, how can I invest in art? Are there any investable instruments? Are there any investable vehicles that are providing exposure to art? And the hard answer is actually there are very few instruments for retail investors that can provide exposure to this huge asset class. It's actually $1.7 trillion, but it's quite illiquid, and there are very few market participants there. There is only one institutional investor in Bulgaria, and not only in Bulgaria, but also in Eastern Europe, that's investing in art, and I can proudly say that I'm working for that institutional investor. It's Expat Capital, and we have Expat Global Art that's investing in the art market, and it's also available for retail investors. But more on that later if you're interested. So let's just briefly go through the benefits of art as an investment class, because many people approach art only from a collector perspective, but there is also that investor side perspective. So in a survey by UBS, collectors mentioned 3 benefits of art as an investment class: inflation, return on investment, and diversification. So historically, art has outperformed inflation, and this is not surprising really, because this is a tangible asset, and real assets tend to increase in value along with inflation. When it comes to return on investment, art is it's a valuable product, it's a valuable asset for its long-term appreciation. So when we analyze the period, a very long investment period, 25 years from 1995 to 2021, we found that art appreciated by 14% on an annual basis versus 10% for S&P, 9% for real estate, and 7% for gold. So in a long investment horizon, art as an investment class has a clear edge over other asset classes. And we also have the diversification benefit of art. It exhibits very small positive correlation with S&P 500. It's 0.14. However, when we look the data, we found some positive correlation with the stock market, but there tends to be 6 to 18-month lag between them. And I will give you some case scenario with the 2008 financial crisis. So the financial crisis in 2008 didn't begin to hurt the art market until 2009. And actually, art auction prices fell only by 27% in comparison to more than 50% of S&P 500. And it took the art market only 3 years to recover, whereas the S&P did not recover to pre-recession levels until 2013. And regarding what we think about going forward, we think this trend in the art market that we saw this year is sustainable, and it is resilient despite the turbulent economic conditions, because collectors, they have a lot of dry powder to spend, and many of them approach art as a storage of value and also to diversify their investment portfolios. And I think this trend has just started here in Bulgaria, because global trends actually tend to come here with 6 or 18 months lag. So we've already experiencing the beginning of this trend, and I'm telling you this from a practitioner perspective in terms of our fund, which is enjoying really an immense interest from retail investors right now. So apart from art, commodities are the best performing asset class this year. And even though the broad-based commodity index, which basically includes agricultural products, energy products, and metals, fall from its peak in June, it is still up 20% this year. And On the other hand, we have also the energy sector, which is the best performing equity sector this year. We've already mentioned that S&P is down 50% year to date, Nasdaq 30%, and energy sector is up 70%. So it is the first time that the energy sector is outperforming the technology sector maybe for a decade, and it is doing so with a very wide margin, almost 100%. So it's really impressive, and some people call it the revenge of the old economy. And I think it's very similar to what happened during the dot-com boom in the early 2000s, when the dot-com boom was taking capital away from the old economy. So the tech sector was growing its supply base, while the old economy sectors were having their supply base shrinking simultaneously. And then the huge demand from China came, and it was met with massive supply deficits. And now, instead of the dot-com boom, we are having the funk boom. And we also have, on top of that, the ESG overlay. So it's increasingly difficult to attract capital in the old economy sectors, meaning, I mean, energy and mining. And when you think about the consequences of these massive underinvestments in the old economy sectors, just look at the consequences of the COVID pandemic. We are having massive, disproportionate increase in consumer demand for consumer durables, which are very metal-intensive goods, and there is just not enough supply of these metals. And we are not only talking about metals. Actually, the underinvestments are also spilled over in the energy sector, in oil and gas consumables, in agricultural products. And after years of calling on those those old economy sectors to reduce their emissions, now policymakers want them to increase the supply base in order to meet the huge demand from consumers, while still urging them to deliver to long-term green energy policy and greener fuels. So this is basically an economic paradox, and we as investors are trying to exploit them, so to say, because these are really big market inefficiencies. So we are not only trying to predict what the next big economic trend would be, but also trying to create an investable product. We are trying to make these trends investable. And what we did 2 years ago was actually creating an investment strategy around natural resources, which is now a mutual fund. But back then, it was only a strategy that was followed by individual investors. So for the period of 30 months, that strategy returned around 100%. And for reference, for the same period, S&P is up 56% and Nasdaq around 50%. So basically, the strategy is yielding 3 to 4 times the return of these indices. So I would like to mention our collaborator with this strategy. It's Bojan Rashev. He's really a brilliant fellow, and he's best in what he's doing in resource management. So we are working in close collaboration with him. And we recently launched our mutual fund on that same strategy. Thank you.
Thank you. Any questions? Yes. So let's start here.
Thank you. Now that this strategy is a mutual fund, who is taking the strategic decisions about the investments? Is this expat or the original founder of the strategy?
Yeah, yes, as already mentioned, we are working in a close collaboration with him. So basically, he's the guy with the know-how in the industry and with the know-how in the sector. So because he's working with those companies, and not all of them, but within the sector, so he's approaching the company from a business perspective, and we as an investors are approaching the company from an investor's perspective. For example, he's proposing a company with a good business potential, but on the other hand, we as investors can see things that he cannot. For example, very burdensome capital structure or very management inefficiencies and ineffectiveness. And these are red flags for us. So basically, that's the way we collaborate with one another.
Okay, thank you very much. And I have another question. You're talking about the old economy, but how about the new economy? What about the renewables? And more precisely, what about the solar renewables? They're actually doing very well.
Yes, yes, and of course, they're also very metal intensive. So the old economy is not only energy, but also mining companies as well. So when we are talking about old economy, we are also referring to mining companies, and mining companies are in the backbone of the transition to greener energy, because greener energy requires a lot of metals, so to say, especially copper and aluminum and other industrial metals. The decarbonization metals are nickel, cobalt, and a lot more others. So they will go hand in hand, basically. They cannot go without one another.
Okay, so let's try short questions and short answers. Yes?
Thank you. I have a question concerning the investment in art. Will you elaborate more on your approach? How do you choose the artists and how do you assess the investment potential?
Maybe Nikolai can help me with that question. He is the most knowledgeable one on that topic.
At another conference, when I'll be a speaker, I'll be speaking about this, but basically we have a special know-how. We don't pretend to be experts in art. We say we are complete amateurs, like the people who built the Noah's Ark, as opposed to the professionals who built the Titanic. Our know-how is to buy low and sell high. We managed to buy cheap paintings and sell them at very expensive prices to important people, especially at expensive gala dinners. So this is our know-how.
I have two questions on the investment in mineral resources. First question is, how long you believe this run will continue? I mean, the double-digit growth. Related to this, is Alcoa and Freeport drops a separate case, or it's something that will give us somehow a hesitance to invest in those? And the second question is, if I look back to the internet bubble, can you compare the current price gain in mineral resources to this period?
Well, maybe approaching the first question before I forget it. So, it is very important to look at commodities as spot assets, not anticipatory assets. So all this hawkish talk from the Federal Reserve and the European Central Bank has yet lead to actual tightening in the economic conditions. And I think based on that, we still will see higher prices on commodities because of that. We are not in economic recession yet. And when we have the supply base so low and the demand so high, I think the best mechanism for getting out of this bull cycle of commodities is actually higher prices. And I think we are not there yet, and there is more to come. And about Alcoa and Freeport, well, yes, they're mining companies, and we saw copper falling from its peak, maybe 20% actually, even more than that. but it is still on a very high level when we look at it in a historical basis from the last 10 years. So we do think that this is not a, this would be not really. These are very risky bets because they're connected with the commodities market. But as soon as we try to transition to greener energy, these companies would be part of the process because of the critical metals they're mining.
Okay. Any other questions? Yes, please.
Hello, everyone. Thank you for your presentations. I have two questions related to the art market. First is, how risky is the art market on the risk spectrum that we always hear about? And the second one is, how volatile is actually this market? And if you can share some reasons why you think there was this big increase in the investments this year? Was it some sort of a hedging strategy similar to gold or something else? Thank you.
Well, I think from investor perspective, the most risky thing about the art market is that it lacks liquidity, even though it's very large in valuation. As I mentioned, it's $1.7 trillion. There are very few participants, so it's quite illiquid. And it's risky to approach the art market as through buying artworks. Actually, it's better to invest in a vehicle that has a wide variety of artworks. So first, you get the diversification benefit from investing in such a vehicle, and then you also can sell your shares at any time. Unlike, for example, an artwork, it's very difficult sometimes to find the appropriate seller, and there is also a lot of negotiation between the sides, and you can end up with not the price you were expecting. About this record year in the art market, I think this is not a coincidence. It is actually, I think, effect from the COVID pandemic, because people end up with a lot of cash on their side, and they still have a lot of savings. They still have a lot of dry powder, and I think this will sustain the rally in the art market in the short and mid-term.
Thank you. There was one more there and afterwards. Yes. First here somewhere. No question, then please.
Question number one, what is your opinion on the NFTs, the digital art? And second question, JP Morgan gold price prediction $2,500.
I didn't get the second question, sorry.
Question number one, the NFTs, your opinion on the digital art. The second question, commodities, gold, JP Morgan prediction price $2,500. What's your opinion about that?
Actually, I do not have a personal opinion on NFTs. Well, for those who haven't heard of them, that's non-fungible tokens. And they're basically, they have more in common with cryptocurrencies than with traditional art. And 1 year ago, they were non-existent, actually. And now they experience the consequences of the cryptocurrency collapse. So it's still they're at very early stage of their development, so we are not considering them as part of the traditional art. So I hope that answers your question. And
Gold, $2,500.
gold. Gold.
JP Morgan has a prediction.
About the gold. Yeah. Well, the gold is really resilient this year, despite of what is happening on the bond market. We know that there is an inverse correlation with the government yields and the gold price. And despite the historical appreciation of the US dollar, gold is really resilient. And I think part of that is because it has a lot of support from the retail investors and also from central bank of emerging markets. A lot of central bank of emerging markets are making huge purchases this year because they want to stay away from the dollar. And I think that the next 12 months would be very good for the performance of gold because we have the fear of recession and also on top of that the geopolitical stress. And these factors are benefiting this commodity.
Okay, thank you. Is that it? One last question, please. Yes. Just one. Yeah.
Who invented cryptocurrency?
Maybe I'm not that competent to answer that question.
Okay, the Chinese. There you go. Why did they invent cryptocurrency?
Maybe you can tell me.
Huh?
Maybe
Excuse
you
me?
can tell me. You seem to have an opinion on that.
I'm asking you.
I don't know. I'm asking you.
Well, you're here for knowledge.
Okay, great. Thank you, Julia. This was good. Now we still have... We still have two very interesting speakers. Daniel Tomov has dedicated his life, more than 2 decades, to the private equity venture capital industry. Changed many names. Started at Arthur Andersen. It was one of the big 6, now they're remaining big 4 auditing consulting companies. Continued at Bull Ventures, was at Global Finance, at Quantum Solar. Finally, in the last decade, he's been a founding partner at 11 Ventures, one of the most famous private equity funds in Bulgaria. Again, Daniel, your industry has achieved so much in the last decade. You have all our respect because it happened during a decade when the capital markets industry has not been that interesting. So you've been very successful.
Yeah, thank you very much, Nikolai. Thank you for being here. Actually, it was very interesting because I think it was 4 or 5 years ago when you invited me to a similar smaller event. Yes. And I see that everybody from the audience is following the global news, so I will not bother you with the trends in the venture capital industry because you follow them, they follow the major trends. But I'll be very brief because I liked very much the interactive approach with the questions. So I'll just give you a little bit of overview what happened in Bulgaria and the region in the venture capital industry, especially since the event that you invited me. So for over 5 years, the enterprise value of all the companies, the tech startups in the region increased 50 times, which is a lot compared to the some of the global KPIs, or even with Central Eastern Europe, where actually the increase was 9-fold. So actually a lot has been achieved in this industry. And when we started 10 years ago, there were only 2 or 3 funds. Currently in Bulgaria, there are 18 funds, and they manage close to €500 million. And there is already 1 unicorn in Bulgaria. It's one of our portfolio companies, but there are probably 3 or 4 other companies, or maybe 5, that are already in this area, soon to become unicorns. So it has been very interesting 10 years where a lot has been achieved, a lot of talent has been gathered. And actually now, still it's the early days of the venture capital industry in Bulgaria, but I think that now we as an industry and all the entrepreneurs are at stage and maturity that they could actually could, I mean, with some confidence, tackle some of the challenges that are actually we face in Europe or in the world, like the climate change, the challenges that we see in healthcare and everywhere. So it has been quite an achievement so far, and I think that a lot is to be achieved in the coming years. And actually, these turbulent times that all of you have discussed before me are actually great times for venture capital, because most of the opportunities actually they come during these times. And I think that a lot of great companies will actually be founded in Bulgaria and the region. So thank you for the time. I would appreciate if we have more questions. Yeah.
How many questions may I ask? A few years ago, I had both the pleasure and the opportunity to participate in one of the funds that was originally invented by one of your competitors. And I was wondering, how can a private entity person like me participate in your funds, apart from 11 Capital, which is a public company?
Actually, we manage 3 funds. So one of it is publicly listed, which is very rare in Europe. There are actually 10 or so funds, like the first one that is publicly listed. The others are private. Actually, in our last fund, which is 60 million euro, like 2/3 of the fund is actually private capital. So, I mean, we are slightly regulated because we have UVECA license, but it's for people with investments above 100,000 euro. So you could participate in most of these funds if you just qualify as an investor.
Okay, and assuming I do not qualify, do you plan moving one of your funds, or perhaps a new one, on the stock exchange market in Bulgaria, like you did with 11 Capital?
Actually, one of our long-term strategies is to have an evergreen fund on the stock exchange, which could actually serve the needs of investors like yours. But also, I think that this is a very good formula for early stage investing, because usually the average holding period for early stage, whether you're at the angel stage or you're a pre-seed or seed investor, it's usually between 9 and 10 years, so which is a very long period. So if you're an evergreen fund and if you participate as an investor, this means that you get liquidity almost from day one, while you give enough time for the companies to mature. So this is a very good formula, and one of our goals is actually either the current public listed vehicle or another one to become an evergreen at some point of time.
Okay, thank you. And one last question. I already know that you believe that Dronamics Capital is going to be a unicorn company, and you also mentioned that there will be 3, 4, or 5 other companies. Can you mention some of the names of these companies?
Yeah, sure. I mean, Dronamics for sure has the potential to become a unicorn. Other companies that could become unicorns are like GTM Hub, for example. Office R&D is a good company that is moving forward. There are a number of other companies that have the potential to become great companies.
Thank you. More? Yes.
Do you prefer to invest in the people, like the energy that drives the projects, or do you prefer to invest just the pure idea, or the third option is just purely on the money side and the growth potential? Thank you.
All of these are actually, it makes sense. We as an early stage investor, actually the people is number one. I mean, we look for people that have the energy, that have the track record as a team together, they've been through challenges, so they have the values, the drive, and everything else. So this is number one. Of course, we look at the idea or the market so that we see that it's something that has potential, whether it's a growing market, and there'll be room for a lot of new players. And so this is the first two. And if we manage to help these guys become successful, obviously the money and the return will come. But we never start with the idea like, okay, how much money we could make out of this company, because this is a calculation that never goes right. Of course, you start with the, you ask your questions, is this something that could return the whole fund as a single investment? And you try to assess whether this could have such a potential, whether these people could actually materialize this idea into something big. But never starting with just calculating a specific return. Yeah.
Okay, may I have the last, yes, please, Ivo.
Anything more particular on how you make your investment decisions? And after you answer me, I'll tell you why I'm asking. There's a catch, but not for you.
Okay, for somebody else. I think that part of the answer is actually to the answer to the gentleman. So we always start with the team, and we do a lot of assessment on the team. Like that's why it usually takes a little bit more time, because when you're early stage, you don't have so many signals about a particular company, and because it's mainly the team, you don't have market traction. You might have a little bit of validation from customers, but it's very limited. So it's all about the team. In addition to what I said, it's like clarity of thought. Because often, very often, like 90% of the cases, you talk with people that it takes them like 10, 15 minutes or 20 minutes to explain what they do. And very rare you meet people that could explain what they do in like 20, 30 seconds without using buzzwords, and you could understand it. So this is something extremely important. Also, we look for people that could demonstrate that they went through some challenge together and they managed to overcome without splitting their ways, which is also very rare. We've seen a number of bones exploding actually in our hands of new teams that actually they split after the first challenge. And also to have the ambition, because everybody says, I have this passion for doing this and I have this ambition, but this is rarely the case, because ambition has a price. And usually, as recently a fellow entrepreneur, he wrote something in an article when he was launching his company. He quoted Thoreau, the philosopher, who said that for anything in life that you do, the price of it is you pay with the price of your life, with the time that you spend for it. So actually, ambition or dreaming big, as we read, but very few actually practice this, is actually you pay a very high price. And I've seen hundreds, even not thousands, of entrepreneurs, and I should say that very few are ready to pay this. And all of us, we actually admire all the successes of different entrepreneurs when we see them on the covers of different magazines. But if you know intimately their life, the price is incredible. And frankly speaking, in many situations, I just wonder how they are willing to bear this. So going back to your question, actually, number one is the team. It's a more complex process. Second is how big is the problem they solve, whether it's a significant problem for a particular group of individuals or for companies, what are the alternatives they have, whether it's a significant advantage that they might have, whether it's technology or business or how they do it, and whether it's a growing market. Because if it's shrinking market, obviously you have very little chances.
Okay, so now the last part for everybody. A few days ago, members of my team met with a guy like you, not exactly like you, but he pretends to be like you, let's say. Because the guy has a fund. He claims to have invested in some, in the only actually Bulgarian, what do you call it?
Yes. So probably they invested along with us.
Anyway, so okay, so the people on the back want to hear what's the laugh about. So the members of my team asked the guy, how are you making your investment decisions? Basically the same question I asked you. And do you know what he said? He said, you know, we just go on a table, we grab a bottle of wine, we pour a few glasses, we talk about it, and we invest. And he said, okay, so at what price did you invest in Payhawk? That's the unicorn. And he said, does it really matter? You know, it's about how much money we're going to make. So I was sure that you was going to answer me something that's totally different from what this guy said to my team. So I wanted to make the contrast here.
Actually, with Payhawk, it was very interesting because we happened to know the team. So we started working with them and helping them much before actually we decided to invest. And there something that really impressed us, which is very rare situation, is that they pivoted more than 20 times, which is really very rare thing. And we saw that actually the way they execute was very fast. Something which is a very good skill to have, and of course we knew them from their time with Telerik, so we had some background on the guys. But in this new capacity as founders on their own, there was a very good sync between the two founders, the business guy and the tech guy, and the other thing is that they were executing relentlessly. Which was and we saw in the early days when there were no signs of this unicorn thing that they were actually quite confident. There was a very high level of confidence in the way they explain things and what they would like to achieve.
Any final question? No? Two more questions. Please, in the back first.
Hello. My question is based on your observations and speculations. Which sector or maybe part of the IT sector in Bulgaria do you think has the most favorable conditions to produce the most or the highest number of startup companies in the future? And why do you think so? For example, is it the fintech sector or maybe edtech?
Honestly, I don't know. I think for sure this would be a product company. It could come from any field. I mean, for example, we cover four industries like fintech, health tech, and future of work and sustainability, and we see great ideas and great founders coming from any area. So it could come from else. I would bet, at least my desire is something to come from health tech, because there's so much to be done there. So really, I would like to see somebody building something great from this area.
Okay, the last question.
Hi, Danny. Long time no see. So I've lived the last few years in Scandinavia, and I found quite a few similarities between those markets and our markets, in a sense that these are also markets that are small, in a sense that a few people there. Yet the ecosystems there are much more integrated. So my question is about the exits. So the exits in Scandinavia, facilitated by the regulation, by the infrastructure, by the participation of investment banks, the participation of the industrial actors, and so on. So, do you see any opportunities, and what are the challenges to the exits here in the region? And has there been a discussion about integration of the regional markets, say the capital markets like Romania, Serbia, Bulgaria, and so on, which could facilitate the exits of the companies from your portfolio?
It's a very interesting phenomenon because we talk about local ecosystem and the region as such, but actually none of these companies are operating here.
apart from the fact that they have their offices and their engineers are here, most of the companies are global companies. They operate in other markets. They recruit from other markets. Like Dronamics, for example, I mean, they recruit from all over the world. The same is with GTM Hub, with Office R&D, with Payhawk. So, I mean, the exits happen elsewhere. So they don't, the exits don't happen here, actually. And it's a different type of integration. I mean, here when we talk ecosystems, we talk about cities, like the major cities where the major talent is, and we see more of these cities actually collaborating. So if we talk about the whole region, we see a lot of collaboration among the major hubs and actually exchanging talents. So we see people from Bulgaria recruiting commercial talent from Turkey, from Greece. Companies from other places recruiting engineering talent here. So we see more of this collaboration, but otherwise, most of the exits actually happen elsewhere. And they do not relate any way to the local environment.
Short questions, please. The lady first.
Thank you for the opportunity. I have one very, very brief question, and it is, I believe that 11 Capital is maybe on the first place as best managed venture fund, but according to your point of view, which are number 2 and number 3?
I mean, we never considered ourselves as number 1 or number 2. We always had this collaborative approach because with most of the people that we work in the industry, we know each other for more than 20 years, with some of the guys from high school and university. So for us, ranking was never important. Probably there are people that are somehow related to the tech industry, software industry from the very start. So you probably know that there is a very great spirit of collaboration in the industry and people helping each other. So when we think, there is rarely a competition among ourselves, but more of collaboration. So I'll give you just 2 examples. When Payhawk was fundraising, everybody from the ecosystem was helping out with the introductions, regardless whether they are on the cap table as investor or not. The same happened with other companies. So the moment somebody's fundraising, everybody's opening their Rolodex and helping. So we never think about number 1 and number 2. So we try to actually push everybody. So when we learn something, we push this knowledge into the ecosystem. Because for us, it's very important that the whole level goes up and we pull each other. So they're better funds, better entrepreneurs, because this means more opportunities for everybody.
Thank you very much, Daniel. Now, I'm sure we destroyed your Friday night dinners. And also, I think Prime Minister Cerar, being a lawyer, has doubled his investment knowledge tonight. We have our last very important speaker, Svetoslav Velinov. Now, Svetoslav, you've had a long career. First of all, I'm impressed by your MBA at the University of Massachusetts at Amherst. Then you worked for, how do you say, Schneeweiss Partners, maybe. And then at a number of other banks, TBI Asset Management, TBI Invest, Astro Asset Management. You were the head of trading at ING Bank, and now you've been the head of global markets at Deseka Bank. And you're going to speak about financial literacy. So this is another topic. So you see, tonight we are very diversified in topics.
Yeah, thank you, Nicolae. Good evening, everyone. I'll try to be as efficient as possible, so let's see if my time management skills work here or not. But first of all, let me tell you that I'm very happy to be here, and I'm very happy to see so many familiar faces. You know, it's been a very long period that I was missing these kind of events. I decided to talk about financial literacy today because I do believe that it's a very, very important area for the well-being of society in general. And it's also an area where we as investment professionals can actually help a lot. of course, along with any type of government initiatives and professional organization initiatives. But we do have our role there, and I'll skip most of my what I have prepared on my cheat sheet here. But let's say if we define financial literacy very generally speaking as the ability to make informative decisions about savings or investments or debt management. And we can think about it as organizing financial literacy around basically 3 pillars. It's financial knowledge, financial behavior, and financial attitude. And it's important to actually improve on all of these for the society in general, so we have a better functioning society. And I do have some statistics that I have prepared, but I'll skip them. But let's say that where do we stand here in Bulgaria currently? Statistics says that roughly half of the population in Bulgaria lacks any knowledge of, or has limited knowledge of any type of basic financial planning skills. This is very unfortunate. I have a couple of studies, by World Bank studies, OECD studies, and even one study shows that Bulgarian students, for example, rank 16th out of 20 countries that were studied in terms of financial literacy, which is very, very unfortunate. So the question is, what can we do, and what has already been done in order to change this? The first thing is that the government will need to actually recognize its role and take the initiative in improving financial literacy in general. And in fact, in the Bulgarian government, Bulgaria has adopted actually in 2021 a so-called national strategy for financial literacy, along with a detailed action plan running from 2021 to 2025, exactly targeting this. And this national strategy is actually based on four pillars, let's say, which are actually the first one is obviously building competence. The second one is actually developing content and giving free access to information and education in the area. And then you have the third and the fourth pillar actually focusing on improving financial literacy for kids and students and the economically active population. And the fourth is actually enhancing financial literacy when it comes down to the vulnerable groups of the society, like jobless people, low-income earners, people that are actually at retirement age or close to retirement age that are also very vulnerable. So this is what has been done. And the role that we as the investment professionals can take in that is that I do believe that all of us, having the knowledge and experience, we can actually actively participate in all of the government initiatives and discussions about measures that has to be implemented to the society at large. That's one thing. Then we can actually leverage on our professional networks. We can use the professional organizations that all of us are part of to encourage initiatives related to improving financial literacy. And obviously we can use our social network as well doing so. So this is my very short message. And this is just it's not a complete list, it's just a few things that we can do, but obviously we have a long way to go before we can actually claim that the population at large has the financial literacy and kind of has the financial freedom, if you like, to make well-argumented or well-rounded decisions about savings, investments, or management of money in general. So that's in short what I have. I can take any questions, or let's have an open discussion about it, because obviously it's a topic that we cannot actually tackle today, but it's a starting point.
Mr. Verlinov, I want to ask you, in a country where already even 7th graders are struggling with the multiplication table, shouldn't the financial literacy in schools begin with actually a little bit historical perspective, that we tell the students that what now we are trying to achieve with the single currency in Europe, with the euro,
was in fact a reality around the turn of the 20th century when one lef, one dinar and one franc, etc. had the same amount of silver. And as Aleko Constantino very well describes in Do Chicago и назад, he could pay everywhere with all of this money. Probably in countries where they didn't recognize the Cyrillic letters a little bit less, but essentially one unit of currency in every country had the same amount of silver and 20 units of currency had the same amount of gold. So what followed this historical precedent is the so-called Belle Époque, so a time of rapid development of entire Europe, and we should just see the good precedent in history and repeat it, because this historic perspective would be more understandable to people who, frankly, cannot calculate very well. Thank you.
Well, it's a tough question. It's quite unfortunate that we're in the current situation where the level of education, at schools and universities is such that, people in 7th grade or kids in 7th grade, cannot, do the math properly. But look, I don't want to look back at what has happened, in the last probably 30-something years. What's important is that the well-being of society really depends on knowing, having the financial literacy and knowledge in general to properly manage their finances. And this is the topic for discussion, because even if we do give historical examples, it's not going to really help improve financial literacy. I don't think so. Maybe I'm not right, but so the question is, how do we as professionals can get involved more heavily in the area of helping government and helping professional organizations improve financial literacy?
My question is related to something similar. People are not indeed familiar with financial planning, but they're very well familiar with gambling. And from a very young age, everybody gambles, bets. Maybe 7 out of 8 ads on the television, it's about gambling and betting. What can we do in order to prove and to tell people that betting has a very low chance of getting easy money? So if they have some financial, let's say, literacy, maybe the gambling wouldn't be such a priority in our society.
But you have the answer right away. That's exactly what we have to do. We have to actually educate the population, giving them the ability to make the right choices. And this is exactly what we have to do.
Thank you for being here and answering our questions first. My question is, as you mentioned, the educational system is not really doing well, and youth is not really educated on pretty much everything, not only financial literacy. Do you think the solution to the problem of financial illiteracy is pretty much removing government away from it and decentralizing the system, meaning allowing private schools to have more freedom and therefore parents being able to choose more broad perspective of what their kids are studying at school? And also applying for the universities, by the way. I'm personally a student in the University of National and World Economy, and I'm not really satisfied with the education. Of course, I'm getting there. So do you think that decentralization is the key, or maybe something else? Thank you.
Well, look, if you think about it, it's a free market, so you have the private schools and private universities, and you have the same service provided by the government, and everybody has a choice. So I don't know if decentralizing is actually the key. I do believe that, kind of a dedicated effort by the government and by society in large is the key. So improving education, I'm talking about financial literacy, but we all know that we actually have to work on improving education in general in Bulgaria from the current perspective. That's the key. And the problem here is that I firmly believe that going forward, we have to start with the kids. But at the same time, being in the situation that we are currently, we also have to consider our other groups of the society. As I mentioned, all of these that I mentioned earlier, are groups of the society that actually need help in improving their understanding of basic financial planning, to put it this way. So we have to consider all of these social groups.
Just a quick question. Financial literacy, it's indeed very challenging in Bulgaria. What are the banks actually doing in order to change the situation? And how involved are you with the government in supporting the educational system to provide a better financial literacy lessons to the students, for example?
Okay, let me take the first part of the question. First, look, how involved are banks? Banks do have activities, related to capital markets and distributing and different types of financial instruments. And all of it actually comes with working with clients, providing materials, and in a way educating the broader public. Now, the question is that if you think about penetration rate of investment products in general in Bulgaria, it's very, very low. And all of us, or some of us, have been working in this industry for years, and unfortunately, we cannot actually claim big success on that. There's a number of reasons. Some of us do remember the global financial crisis, 15 years ago. Now, we had the capital market working quite well before that, but now it is what it is. Banks are doing what they're doing, but we have to remember that they're commercial banks. They do it for profit, like everybody else. So, quite honestly, I'm not directly involved in any type of government activities. I do follow what's happening and what has been delivered so far. I do believe that we could do a better job. I mean, the government and ourselves as investment industry professionals. But I do not have any direct involvement, no.
Questions? Well, ladies and gentlemen, I'm not sure about you. This has been one of the most interesting conferences I've attended. Thank you so much for spending the time with us, and thank all the speakers for their energy and participation tonight. It's been great. Thank you very much.